Thanks everyone for joining us today. We have a much anticipated update with Talisker Resources. It's been a couple of months since we've had an update and they've had a few key news items. So looking forward to getting that update. As always, this presentation will contain forward-looking statements. If you would like to know more about those, you can find them on the company's presentation on their website. And there will be a Q&A section, so feel free to input any questions you have in the Q&A box at the bottom of your screen. With all of that boring stuff out of the way, I'd like to introduce Terry Harbort, CEO of Talisker. Hi, Terry.
Hi, Deb. Thanks very much for the introduction and welcome everybody to the webinar. It has been a while. We didn't run one of these through the summer period. Always hard to get people to come online. I am on the road. That's why I'm dressed in this lovely attire at the moment, presenting to you all from my car. Hopefully that'll work out.
Are you driving right now too?
Oh well, I'd love to have one of those fancy automatic cars, but unfortunately, I'm parked on the side of the road.
Well, thanks for making the time, Terry, and I like the swag. So I think why don't you start by giving us a bit of an update, and then we can just jump into Q&A.
Yeah, I will do, Deborah, and I've got some slides here as well that can show where things are. They're in 2D. Hopefully, people can see fairly clearly where we're heading to. A few of the things that we can touch on today, and happy to take questions on any of these that any of our shareholders or interested parties would like to know more about. These really have come out as independent press releases. The first one of these was the completion of the mine plan, and I'll present some of that today. We're looking at doing development, where we're doing construction, where we're looking at extracting our first stopes coming into next year. We have done quite a bit of surface work. We're looking at increasing the stockpile area that's there, revamp some of the workshops and things at surface where the Mustang Mine will be going ahead. Recently, we put out a press release of our bridging agreement completed with the Hoiston First Nation. The bridging agreement, of course, sits between our existing agreements that are exploration style agreements to incorporate capacity for production there. So it's not a fully fledged IBA style agreement, but it contains many of the elements of an IBA, and we're able to define what the framework for the IBA is. So it'll be relatively short time frame when we go to that point of an IBA. I guess to answer preempt the question of when would we sign an IBA, it had really, once we've gone through the process of looking at putting our own mill on site, would be when we'd look at going to a fully fledged IBA. So this agreement sits in the middle of that. Kicked off very recently our portal construction. Those of you who've been following the press releases, that's a 4x4 metre hole or construction that we're looking at, that we are building there now. The next webinar I have, I'll have some good photographs of that great work that's being done there. We're increasing that size there from our original plan up to 4x4 metres, so we can get bigger equipment, bigger trucks in and out of there, so we can get a 20 or 22 tonne truck. So when we're looking at increasing our production rate, we've already got that access infrastructure in place. Our drill programs are kicking off today, I believe. It's to mainly focus on resource conversion, so taking the bits of a small bit of year one that's not in M&I category, or proven and probable category into indicated, and also drilling into some of our year two stopes, or most of our year two stopes. So I've got a slide that looks at where that is. They're relatively small drill programs. So I'll just say that to everybody now. You used to are very big, aggressive programs as we're in exploration and resource definition. What we're looking at here are around about the 10th of the size of that. So they're quite small programs from what you're used to from Talisker. We're currently in the process of finalising the ore sale agreement. We're in the backwards and forwards phase of negotiating to how and where. We're hoping very soon, within the next couple of weeks, to have release out to markets on the ore sale agreement. And then, of course, that's the final step in drawing our second funding draw. Our second funding draw is to pay for our development next year. So extraction of those stopes into year one and some into year two. And we're looking to have that wrapped up in our schedule here sort of prior to the end of the year. Hopefully beforehand if we can. Our funding partners at Sprott are already looking at, or they're already involved in the due diligence, looking at the mine plan, the drill plan, all those good things that they have to look at to trigger that second draw. So pretty excited about that coming forward. We'll have a look here at some of the access construction that we're looking at. You can see there on the right-hand side, the entrance to the Mustang portal. So that's where we come in from surface. It's a bit of a funny angle, but the decline will come right down there to the 1700 level, and we'll work on access development on multiple levels. So 1700, 1750, 1800, 1850, and 1900. So these are all 50-metre separated levels. The blue areas that you can see, that'll be in vein development. So we'll be developing along the veins as is the action of long hole extraction. So they'll be the areas, and I'll show shortly where the year one in particular stopes are that we'll be extracting. There's about 450 metres worth of development down that decline. We'll be kicking that off as soon as we've finished the portal construction there, shotcreting and rock bolting, getting all that solid. And we'll be looking to kick that off straight away. So probably sometime in November, within about a month, I'd say, a month to 6 weeks. And we see that taking a few months to have that finished, and then we'll have all that access up and ready to go. Looking at the next slide here, these are the stopes that we're looking at extracting in 2024. The majority of these are already in indicated category. You'll see on the next slide the drilling that we're going to do between now and the end of the year. That'll be to convert some of these that are in inferred into indicated. As we do that blue development, we'll also be sampling that. So majority of this will be coming into P&P or proven and probable category prior to us mining. So we'll have a very good control on the grade and tonnage prior to actually extracting those stopes in hopefully first quarter 2024. So looking at the drill program we've got coming up, we're still finalising some of the year two resource conversion, how much we want to do between now and the end of the year. You'll see it's only a very small amount for year one, about 1,500 metres. And the reason for that is that most of this is already in higher level categories. So there's just a few areas that we have to get pierce points in to be able to complete the geostatistical model to get that into indicated category. Year two, we're looking at about 7,500 metres. So they're the green stopes that you can see there. Although those already have holes in them, but we want to convert those into indicated category. So relatively small program compared to what you're used to from Talisker. We've had some very big programs, 60, 70, 80,000 metres per year. So it's relatively small, but there should be some good results coming out between now and the end of the year. So relatively simply, Deborah, that's about it. Happy to open to any questions that you may have received or are coming online from shareholders and other interested stakeholders.
Sure, sounds good. Thanks for the update, Terry. The graphics were really helpful too. So the first question I had is, what is the total cost of development work for the year?
With the portal and decline, we're looking at about 1.6 million. It will be the cost to get that implemented. Okay. In Canadian, yeah.
And we've got a question from an audience member. So what is your expected mining rate?
We're kicking off relatively small at 100 tonnes per day, but we're already doing the planning here to be able to escalate that to 300 sometime next year and then on to 500 tonnes per day, either by the end of 2024 or early 2025. So we'll have to submit an updated mine plan. At the moment, we're just submitting the mine plan for the current permitted rate, which was 100 tonnes per day, and then we'll be putting up very soon the 500 tonne per day one. But really, we're going to start off at 100 till we get things well bedded down, and then increase to those rates. And that's really why we're looking at those bigger dimensions of the of the hallways.
Okay, and I had another question, which I think you pretty much answered, which is what is the projected gold production for 2024 and 2025?
Oh, the number of ounces coming out?
I think that's what they're asking, yeah.
Right. If we were to do 100 tonnes per day for all of 2024, which is our current year one schedule, if you like, we're looking at about around about 10 to 12,000 ounces. But we're looking at increasing that to 300, and that sort of puts us in the 40,000 ounce realm. And then by year three, once we get up to 500 and then to 750, we start to move up to that 80 or 90,000 ounce per year production. Where we sort of plateau out is around about 90 to 100,000 ounce production, and that'll be end of year three coming into year four.
And do you have a maximum / restriction on surface stockpile tonnage?
Look, in the current plan, in the current mine plan, we do, but we're changing that right now. So we're basically increasing that area out. Felipe Castagnado, who's our VP Tech Services, is right on the engineering design of that now to be able to increase that surface footprint so we can store more material. He's also working on the road there. That'll be basically the access trucks coming in and out.
Okay. Is there any dewatering required to implement the mine plan?
No. Everything we have now is above the water table. Really, about 50% of our February resource that came out is above the water table. So we've got a fairly long production timeline until the water table becomes an issue.
Okay. And when do you plan to submit the notice of alteration for the major mines permit? And is there anything else required other than that submission?
Oh, look, it's only completion of an updated mine plan. And that updated mine plan for those increased levels is underway now. So we'd expect probably within a month or so, we'll have that submitted.
When do you expect to finalize the ore sale agreement?
Hopefully pretty soon. We see that New Afton signed one with somebody else prior to us. So now we've got the pressure on to get ours out. We've had multiple iterations come backwards and forwards. I'm hoping to have something out to market relatively soon. Sure as everyone's aware, the guys at New Afton have been pretty busy bringing the C-Zone online, which has been a fairly big task and all hands on deck. So they probably haven't had the time allocation that they would have liked and that we would have liked to dedicate to finalising that agreement. But Bill's certainly on top of that, and we expect to have that relatively soon.
Okay. And there's been some comments on the blogs about mills available for sale for acquisition. Is that something that you're considering?
Sure. Look, we're always open to those opportunities. I guess the challenge with other people's mills is how old is it? How far do we have to transport it? We might be able to acquire them very cheaply, but it's the transport and installation that have large costs. I don't recall exactly which one was mentioned in the blogs, and I think it's CEO.ca where that was mentioned. It was quite a ways away. I think it was in Manitoba or Ontario. So the cost to truck that out to here would be in the tens of millions of dollars, so relatively high. We're always open to opportunities for acquiring mills that we could truck to ourselves and manage ourselves. Certainly we're open to that. The way the markets have been, the capital markets have been, and I'm sure all of our shareholders and everyone on this call has suffered some pain over the last 18 months. And we have to be creative and have to be dynamic. And certainly part of that is looking for other opportunities. And certainly having our own mill really does improve the economics, reduces our all-in sustaining costs, increases our profit levels. So it is something we have to look at. We've just got to balance that with, well, what's it going to cost to acquire it? What's it going to cost to transport and implement it? So that there's a fair bit of analysis done. But yeah, but by all means, we certainly have our eyes open to that, and we are looking at opportunities that can help what our long-term pathway is.
And is the underground development being done by Talisker personnel or a contract mining firm?
No, it's all contract mining at this stage.
Okay. Are there any updates on Ladner with lots of activity underway at Bralorne? What's your strategy for that project?
we're pretty heavily focused on Bralorne and bringing Bralorne into a production stage. Obviously, we have to keep minimum amounts of work ticking over in all of our assets to maintain their assessment levels. We have done a small program at Ladner this year as part of that assessment management. So some soil sampling there, some mapping and some rock chip sampling. Those samples are currently in the laboratory now. So we'll probably have a release coming out within a month or so, looking at what that surface sampling and mapping's uncovered. So with market conditions, of course, we can't bring multiple projects forward at the same time. So we're really doing the minimum there on Ladner and on our other projects to keep them in good standing and try and move them along a little bit if we can.
And going back to Bralorne, do you have an idea of what your all-in sustaining costs are going to be on a per ounce basis?
Yeah, look, our calculations at the moment are around the 1,100 mark.
Okay. I've been seeing steady reports that you've been buying in the market recently. Can you update us on how many shares you bought this year and what your total position in the company is?
Oh, I don't know if I can. I don't know if I can give you that level of detail.
Maybe just a round number of like how much you've been buying this year.
I'd have to have a look on CEDAR to tell you the truth. Deborah, anybody interested, please just have a look at the CEDAR filings. I've sort of been grabbing it when it's on the cheap. I think it's a pretty good time for buying. As an insider and a CEO, it's often challenging to get windows to buy stock because I know when press releases are coming and what's going on in the background. So I've just tried and had a fairly open acquisition point with my broker to try and grab when it gets to certain levels. So unfortunately, I haven't got in my head what the total is there. We're probably at $60,000 or $70,000 worth, I guess. But I think it's a good time to do it. Yeah.
Well, when we edit the video, we'll do everyone a favor and actually come up with the numbers. And
sure. Yeah.
Or the description below.
Yeah. No problem at all. Look, I'm happy to do the math and get that together.
Oh, I can study. It's all good.
And really, the percentage I've got, we're probably it's above 2.5 from where I were, so it's probably in the 2.5 to 3 range, I guess, 3%.
And a couple other audience questions. So approximately how many mills are near enough to be a reasonable possibility to acquire? 1, 2, 3, 4 more?
Of the ones that I know about and had a look at, I'd probably say 3. Really, there's probably a lot more in the north of BC, in the Yukon, in other areas. It just comes down to balancing cost versus trucking and implementation and age. Really, if a mill's been sitting there rusting for 30 years, the cost to spin that back up might be prohibitive. So there are tons of mills around BC, tons of old mills, particularly up north, 200-300 ton a day style of things. So there is a plethora of them. There's a lot. But it just comes down to what state they're actually in. Are there processing plants? It's probably as expensive or cheaper to buy a new Nielsen gravity circuit. Some of the rougher flotation systems are probably not tailored to gold or deal with other sulfides such as chalcopyrite or deal with base metal. So all of that needs to be balanced out. Certainly for us to truck somewhere else, there's a lot of stuff very close. For us to acquire and bring down to us, I don't know, I'd say there'd be probably 10 plus. Just depends on size and quality, what sort of quality level they've in. Have they been stripped? Have they been well maintained in a care and maintenance environment, or have they just been left to rust?
And can you give us an M&A outlook across BC or more specifically maybe southern BC? What are you seeing in terms of activity?
Well, things are pretty quiet. I think a lot of the mid-tiers to majors, although they have a lot of interest, and we've certainly seen a lot of M&A interest, they're very slow to execute. In the junior space, although we're not seeing too much at the moment, I think we're probably going to see more consolidation in the juniors, simply because people don't have access to capital. It's a really tough market. People are struggling just to maintain their minimum G&A and maintain their assessment costs in projects. So we're starting to see that now as groups have to get creative on a challenging market conditions. So we're seeing a lot of ground opening up, and I think we'll probably see a lot of juniors come together to try and get critical mass so they can raise more capital. And I'm hopeful that we'll start to see the intermediates and majors coming in. The real question for us as juniors is if we're trading at EV per ounces that are 75% below what they were a year and a half ago, is it a good time to do it, to be bought out? Because 100% premium, very difficult to get, doesn't actually get us anywhere. So it's a pretty challenging time for the junior space. And I think, we're actually in a pretty good position with the funding deal we have and the opportunity to generate our own income from production. And a lot of pure exploration plays are really struggling just to find that capital. And a lot of the traditional sources of capital don't have available funds. So I think we are going to see a lot more consolidation, a lot more activity, and a lot of it's just going to be survival based. Companies saying, well, let's get together because we can't do it alone, because we just can't get the funds.
Is that something you would consider, like acquiring another junior or merging?
Yeah, look, we've always been interested in picking up undervalued assets. I suppose it all comes down to what the holding cost of additional assets are. Comes down to what's the amount of work that needs to go into something before it is in an advanced stage or is at a mineable stage. Things that have mine permits or already advanced resources that we don't have to put anything in and we could hold, then sure, we'd certainly have a look at that. I don't know if that question's coming from somebody who wants to sell something. If it is, please send it to us. We're always having a look at things and looking for opportunity. And if we're in a slightly stronger position than somebody else and we can acquire assets that we think are valuable in our long-term portfolio and long-term strategy and have a very low holding cost, then of course, we'd be crazy not to have a look at it.
Another audience question here for you, Terry. Assuming that you don't plan to be a production company, what benchmark do you have to achieve to be attractive to a potential buyer? I'm assuming that they're talking about resource size.
So what was the first half of the question, that we're not going to be a producer?
Yeah, if you're not going to be actually maybe answer it both ways. If you are going to be
sure.
a producer,
I think the first answer is yes, we are going to be a producer. That's why we're mining. And the second part of the question was relative to resource size to be...
I think so. They said, what benchmark do you have to achieve to be attractive to a potential buyer?
I think we need to be in production. I think we have significant enough resource. My answer would be more than 1 million ounces. And we have more, we've got 1.7 and we've got drill holes in up to 2.5 million. So I think the resource footprint is certainly there. Acquirers at this stage look more at what your production rate can be. I think we certainly have that resource base there. It seems like the intermediates and the majors are really looking for projects to be fully de-risked. So they're really relying on juniors to take them all the way, which is challenging for most of us junior companies because we're exploration guys. We don't have the resource in human resources to be able to take them there, and that's why we've started to build the team ourselves that we have, is so we can actually do that. Although we might see very rare transactions like Great Bear that are acquired pre-resource, but really we're not seeing any other transactions that are early stage resource, late stage resource. Even that there's things out there that are through feasibility, but not permitted and still not being acquired. So it seems at the moment that we need to be where we are, and that is with a good resource footprint in production or close to production and fully permitted. I think that's what the big guys are looking at. The question I'd put back to the asker of that question would be, is it a good time to sell the asset or the company now with such poor valuations across the market space? When we're looking at a 10 or a $15 EV per ounce valuation, it'd have to be an absurd premium to make it worthwhile. When we're looking at in the next year to 2 years, generating more income than our market cap. It's to me, it just doesn't make economic sense to walk away from it simply to cash out at a loss. Mm-hmm. And, we're certainly seeing that on the market in our share valuation and other people's, that people are selling at a loss because, we know what people came in at and they're exiting at a loss. So I don't know about the rest of my shareholders, but I'm not really prepared to do that at the moment. And that's why I've been buying on market, because I think the turnaround's going to come, and it's the right time to be positioned in that, particularly with our asset that this time next year is going to be in some serious production.
There was discussion to add 400 to 700,000 ounces. When might this drilling occur?
Look, we already have drill holes into those areas. I just don't see the logic between drilling it, because our ounces cost, let's say, $20 an ounce, $25 an ounce to drill. And if the market's going to value us on average at 15 or 10, then why would we drill anything? If we have to raise capital and spend that money to drill something that we're only going to get half the valuation for, I don't think there's any benefit. We already have enough ounces defined to mine. And then we can use our own cash to be able to drill off increase ounces and grow that resource. But at the moment, the logic, the economics just aren't there to go to market, raise the money and drill something that the market doesn't care about.
Mm-hmm. Makes sense, unfortunately. Another question from the audience: where in Bralorne would this mill be located? Being that you're operating in a residential community, would the noise from a mill become a nuisance for residents?
Well, there was a mill there for 40 years, and there's been production at Bralorne on and off for 100 years. The last time a mill was there was from 2009 to 2016. I'd expect that any residents there would be well aware that they're in a mining community, and because that mining community is one of the oldest in British Columbia. So my expectation is that anyone who lives there or is bought there understands that it's a mining community. They'd have to walk around with their eyes closed to not know it's a mining community, to not know that one of the largest mines in Western Canada sits underneath the town and was there prior to the town. So I guess that's something that we'd have to work with the local communities on. The mill itself, where it was originally located, and would probably be where we're located, is at our site, which sits low down, so down away from the town. In general, mills are fully contained within buildings, so it's a low drone. Yeah, look, I don't know. I'd be certain that the community would understand that it's a mine site. It's been a mine site since 1889, and it was 50 years of production. Avino had it in production. So I think anyone who lives there now or is looking to live there, I think they should have a very clear understanding that it's a mine.
Do you anticipate finding more veins once you're down in the stopes based on the history of the mine?
Yes, we do.
And then one other audience question. I know that this is not the right time right now, but a year from now, you will be producing X. What is the X that will attract a buyer?
Challenging question to answer. It sort of depends on the buyer. Any sort of production, I think, would interest a buyer, but buyers buy it at different levels. Some people might want 20,000 ounces, others might want 40 or 50, others might want 100. Big scale majors like 300. Well, I don't think we're ever going to have 300 at Bralorne unless we have a bulk tonnage scenario. So it really depends on the acquirer, really, depending on what they're looking at. This is a vein type deposit. Most miners that mine vein type deposits mine in the realm of sort of 50,000 to 150,000 ounces per year. So I think we sort of sit in that bracket very squarely.
One last question, Terry, and then we can end things off. So maybe you could just list the upcoming catalysts for the next 3 to 6 months so investors know what to expect from Talisker.
Sure. So I guess the major ones that are already underway, and that is the drilling that we're doing right now, and the conversion, the development work that we're doing. It's all going along very well, on track. The completion of the ore sale agreement should come up relatively quickly. Following directly on from that will be that second draw. So our listeners will recall that's $11.75 million US. And that really funds that year 2 and some of that year 3 development work. After all that's buttoned down, really we'll be looking in the first half, most likely sometime in the first quarter of next year, our first production stopes coming out. And then the really exciting bit for me as a CEO, the trucking of that ore and receiving cash flows. So it's a really catalyst strong 12 months that we're looking at. As we get towards mid next year to a bit further, we're looking at increasing that production rate. So moving towards that 300 and hopefully up to that 500 ton per day scenario. So a very exciting period, and basically just following these steps one after the other to achieve it.
Great. Well, Terry, thank you very much for the update and for taking time out of your site visit today. If anyone has any additional questions or would like to book a one-on-one, feel free to reach out. We can get that organized for you. And thanks to the audience for participating.
Thanks very much.